chapter. And I have the privilege of introducing Mr. Mike Yankunas tonight from Whitfleet, who's going to talk to us about the what I thought was a very catchy title, Trust is Not an Internal Control. Just a bit about the IMA and the Madison chapter. So the Institute of Management Accountants is a global organization that's in over 120 different countries, over 60,000 members. And it is focused on being the professional standard for management, accounting, and finance professionals. The IMA has its certification as the Certified Management Accounting Exam, or Certified Management Accountant. It's a two-part exam, and it is a global standard as opposed to some of the others out there, such as the CPA, which is administered by states. The Madison chapter, we're here as your local resource to answer any questions that you may have about the IMA itself, the CMA exam, or we put on our events like this for both networking and continuing professional education. So, without further ado, tonight's guest speaker is Mr. Mike Yankunas. He has his Bachelor's of Administration from UW-Whitewater in both accounting and finance. He is formerly a partner from Williams Young LLP, and he's been at Whitfleet for now over 9 years, where he's been a partner. And he's also a member of the Investment Advisory Committee for the Attic Angel Place. He is also a member of the Certified Fraud Examiners, AICPA, and the Chartered Global Management Accountants. So without further ado, let me please introduce Mr. Mike Yankunas, and Trust is Not an Internal Control.
Thank you. I'm not going to stay in front of this. I think the room is probably small enough. I don't need a microphone. If anybody's having trouble hearing me, just say so and I'll speak louder. The topic was one that, as I think about my career in fraud, I know that doesn't sound good either, but I've had an opportunity to see a lot of strange things over, well, my first big fraud case was first one was in 1988, but the first big one was 1990. I represented a European bankruptcy court, an Italian bankruptcy court. I was hired as a liquidator here in the U.S. to take care of a subsidiary, a small subsidiary. And it was supposed to be a very benign type of situation, and it turned into at the time, one of the biggest frauds in Italy ever. The manufacturing company was at fault, not the U.S. subsidiary, but we found out that all the assets that supposedly were in existence in the U.S. really weren't. And the audit firm at the time was a Big 8 firm. Those of you who can remember, or Big 6 I think at that point, was Big 8 when I started, which was a while before. But that opportunity to work with a bankruptcy court judge in Milan, Italy, was something I've never had before and probably, may never have again. But it got me launched into this idea of fighting fraud and looking for problems in business that either we can help somebody fix before it happens, or we can quantify and assist district attorneys and U.S. Attorney's Office and any other number of legal organizations in fighting fraud. So what we're going to talk about today, I've got an outline. I've got a number of slides. There are quite a few slides out of the ACFE study for 2012. I'm not going to spend a lot of time on those, though. We're going to use those to get a basic understanding of the impact of fraud in the U.S. How many in here, let me just kind of get an idea, how many in here have work for employers greater than 500 employees? Okay, good. So, maybe 40%. And the rest of you, I'm assuming, are under 500, or how many under or 100 or under? Okay, couple. Some of the statistics in the ACFE study break out greater than 100 employees and under 100 employees in terms of a line of demarcation, and there are some differences between the two in the smaller organization versus the larger one. Obviously, the larger one is going to have more resources and more ability to segregate, and they don't tend to trust quite as much as maybe a small organization would. Now, the other thing I would suggest, if you've got a question, ask it while we're in the middle of, if I'm talking about something and you want to know something about that, or you've got an issue that you want to discuss related to what we're talking about, ask the question then. It does none of us any good if you ask the question 45 minutes after I've covered the topic, because I may not remember what I said. So participation is key. I don't want to stand up here and just lecture to you. I've done that with my kids. It doesn't work. So, all right, let's get into this. Occupational fraud definition. You can all read it. Basically, it means that employees are stealing from their employers. The ACFE study, how many, by the way, are ACFE members? We got a few in here. Okay, 4 or 5. Good. This is the definition that the ACFE uses to describe what's included in their report to the nations on occupational fraud and abuse. That study comes out once every 2 years. The most recent one was just issued this past, when did it come out? November? Maybe a little bit earlier. Every 2 years, they usually cover anywhere from 13 to 1,500 cases submitted by CFEs from all over the world. And so you really get a true flavor when you start to look at some of these statistics. This is the problem. People taking from their employer. It's happening everywhere. How many of you have been involved? How many of you are aware of a fraud that's occurred at your location, your organization? Don't be shy, put them up. Okay, how many of you didn't know that one was going on or don't know that one is going on? Everybody else should put their hand up because somewhere there's something going on. It may not be big, but it more than likely is happening. Organizations, you can't avoid it, no matter how big or how small you are. It's a problem. It's a universal problem for all of us. And for internal auditors, people who are responsible, CFOs who are responsible for control structure in their organizations, this is a real serious problem. I want to play for you a quick clip. Some of you may have seen this, and I'll comment on it after it plays.
Their homework, their research.
This is a commercial. Don't pay attention to this.
To Conservancy Place, the forest's premier community that truly lets you have it all. Location, community, and nature at Conservancy Place.
I have no idea where that is.
One city's finances as her personal piggy bank is sentenced to almost 20 years behind bars.
Prosecutors said much of the money that Rita Crundwell stole was used to run a horse farm. Horse farms, including one in Beloit. Rock County reporter Margot Spann is in our bureau with more on Crundwell's sentencing today in federal court. Margot?
Susan and Eric, 60-year-old Crundwell was taken immediately from a courtroom in Rockford to a jail cell.
Outside federal court on Thursday, Dixon residents are trying to move on and finally close a dark chapter in their city's history. Judge Philip Reinhardt sentenced their longtime comptroller, Rita Crunwell, to 19 and a half years in prison.
She barely apologized. I mean, I don't think anything would change it.
I think the citizens deserve more answers. You know, where is the rest of the money? Or did she spend it all in that lavish lifestyle?
Federal investigators say Crunwell embezzled nearly $54 million for more than 2 decades.
You can trust, but you have to verify. And I think that's the lesson for other municipalities, governments, that you can place trust in individuals, but there also needs to be verification.
Crunwell pleaded guilty in November to wire fraud. Investigators say she used the money to fund her horse breeding businesses and an expensive lifestyle.
If you take the money we have in the bank, what we have under contract, and the estimated value of the assets that are currently in our custody, soon to be liquidated, you're looking at about revenue in the area of $12.3 million.
The mayor testified Crunwell's massive theft caused great hardship in the city. He says the city will move on.
The amount of money that she was taking, and now that we've got the holes in the dike all plugged up, we're going to recover pretty fast.
Now, Crunwell still faces 60 separate state felony charges, which she has pled not guilty to. Prosecutors say this is the biggest theft case they've ever seen of a public official in Illinois history.
The events of November 9th, 2012.
Okay. For those of you who weren't aware of what that case is talking about, it's the city of Dixon, Illinois. Everybody heard about that one? If you're in the internal audit business or the external audit business or any kind of financial related occupation, this thing was probably one of the largest. I mean, it's the largest in Illinois history. It's the largest one I've ever seen. And I had an opportunity to work on this case as well this past summer as a consultant to the city of Dixon. We weren't trying to decide how much she stole. We were trying to help them understand how it was hidden. The financial statements of the city obviously had to reflect somewhere where this $53 million went. How many of you own horses? Switching gears. 2? That's it? Nobody else has a horse? Part of what the people at the city, one of the problems they had, the major problem they had, was that they trusted this woman. Everybody trusted her in city government. She was there 22 years, I believe, something like that, 20 plus years. And she had a very good grasp of what was going on there, obviously. And eventually, I mean, the fraud itself really started quite early. It wasn't one of these, I worked 20 years and now I need to do something before I retire. This started way back. So the amount of time that this fraud encompassed is really, it goes against all the odds that you see with the ACFE study, for instance, where they say the average scheme lasts anywhere from 24 to 36 months. Personally, I have yet to see, I can't remember any scheme that I've actually worked on that's been shorter than 5 years. So, I mean, these things do stretch out a long time. This situation, though, is so egregious that people just could not believe it happened. And when we sat down and we started to look at how was it hidden, the scheme was so simple. You know, it's one of those things where you look at it and say, why didn't somebody see this? So the point with the Crunwell case is that people saw things that didn't make sense. But she was trusted trusted to a very high degree. She handled all the financial activity for the city of Dixon. The amount of time, again, that passed, the amount of money that was misappropriated, people should have seen something. And in talking with them after the fact, they did see things. I asked about the people who own horses, because anybody who owns a horse, how much money do you make with your horse? None. My wife and my daughter have taught me that lesson. You don't make money with horses. Everybody wondered how she could be running an operation going nationwide, coast to coast, you know, with these thoroughbred horses that she was raising, or quarter horses, whatever it was, and making all this money that allowed her to buy property in Illinois, property in Wisconsin, property in Florida. The one asset that she had that I was hoping to get a look at and never did. Now think about this. There was a motor home that she used to go to these different horse shows. $1.3 million motor home. You know, it's hard to imagine a house with $1.3 million. Well, a motor home? Who has a motor home like that? Except somebody who's stealing $53 million. People saw all these things, and it just didn't register. And she was telling people that she was making this money on her horse operations. And as I said before, you don't, horses are like boats. They just keep taking from you. Well, horses give you a little bit back, boats don't. But this particular case is a classic. And again, an example of people not wanting to believe what was right before their eyes. Now, cost of occupational fraud. In the case of the city of Dixon, $53 million. In the case of most companies, the ACFE estimates that it's 5% of annual revenues are lost through fraudulent activities within the organization. And you think about 5% dropping to the bottom line, that's a huge number. And again, like the people in the city of Dixon, many employees are blind to the fact that things are going on in their own organizations. This is a chart of what kinds of losses are being incurred. This happened to be the 3-year 2008, 2010, and 2012 time frame. And you'll notice that the majority of the losses are relatively small, less than $200,000 in the cases that were included in these studies. But you'll notice, I mean, obviously a lot of them, what's the percentage on that? I can't read that. 56% in 2012 were $200,000 or less. The jobs that I've worked on, the jobs I'm currently working on, you know, we're in this area over here, or this, okay? But this is where the action is. And as you are looking in your own organizations for opportunities, you're not going to run across these $1 million ones all the time. You're going to run across the $50,000 one, the 40, 30, yes.
And the definition that you gave earlier, does that include just outright stealing? Or, because I've read where in fraud, it's more than just stealing. It has to do with the accounting issue as well. So in your definition is just plain stealing in there?
No, it includes the three categories of fraud: financial asset misappropriation, corruption, and financial statement misrepresentation. Those are the three areas of fraud that are encompassed in this study. And the financial statement fraud one is going to give you stuff like this with a very low frequency. This is actually the frequency issue here, the 25%. That's not, I used the wrong example there. Financial statement misrepresentation encompasses about 5% of the total cases. The greatest percent, it's close to 85 or 90%, are asset misappropriations. This is just a dollar breakout. I may have another slide later, but that shows that. But again, the three types of activity, far and away, asset misappropriation is the one that leads the list. It's the easiest one to do. Yes?
I don't want to jump ahead here, but since I teach auditing, I gotta ask this question. Were they audited?
City of Dixon?
Yes. And if so, by who? I like to use these cases.
Yes, they were. They were audited. Now that obviously is going to be litigated, probably from now until who knows when. But the audit firm had been issuing the audit, had been doing the audit for quite a long time. And over the last couple of years, they subcontracted with a sole practitioner in, I believe it is in Dixon, who was signing the audit report, but they were doing all the work behind the scenes. So the whole process has become more muddied, and it is a mess, to put it mildly. And it includes some other things too, that when you look at the possibility of conflict of interest, those issues were there as well. And all of that is in the process of being litigated. You can follow that one in the newspapers or online to get more information on that. But this one is far from over with. Usually I have a clicker that works, and this will work. And I usually wander around the room, but you have boxed me in here. I can't go very far. All right, this particular slide talks about the organizations themselves and the impact on each of these organizations from the standpoint of the study itself. You'll notice that banking and financial services is the leader in terms of frequency. And if you look down the line, hopefully you can read it, but you'll find you can slot your business in there somewhere. All right? Again, the point being is that no one's immune. This is an equal opportunity problem across the board. I'm waiting to see now the 2014 study when they drop in Dixon into this one. It's going to skew the numbers just a little bit. This particular chart breaks out the sorts it by median loss in these different industries. And you'll notice banking and financial services drops down. They've got the most occurrences, but their average loss was only $232,000 in these cases. Okay, you got to remember that as you're looking at this information. It's the cases that were reported that these numbers represent, okay? But it gives you a pretty good idea of what is going on in many different industries. And I would strongly suggest, if you've got any interest in that at all, in finding out more about this, you can access the ACFE study and take a look at the whole thing. There's a ton of charts, a lot of verbiage, and it's actually a pretty good primer on fraud. If you want to know about fraud in the U.S., and now with the expanded version of the report to the nations, it literally encompasses places all over the world. You can find it in there. This slide shows the private company is a little more susceptible than the public company, and government, not-for-profit, and then the other category. Private companies tend to have the lower, lesser employee amounts that I mentioned earlier. And so as you start to look at the impact, I mean, almost 40% of the reported frauds over the last couple of years, the last 6 years, have been in the private company sector. Median loss. Now, the median loss isn't all that bad, but still, on an average, losing $200,000+ to somebody who is doing something to discredit or disrupt or destroy your business, it could be $2 million if it pulls you under. Okay. Again, you look at the private company losses tend to be also a little bit larger. They're more frequent and they're larger in terms of the median numbers. Here's that size one I was talking about. Less than 100 employees, you've got about 32% in this last study. The 100, greater than 100 up to 1,000, about 20%, and then you can see this. I think the interesting part about the 1,000 to 999, I mean, now we're getting into the publicly traded companies, larger organizations, and they have been on the rise. And I'm not sure what the thought process is, because a lot of the other statistics you see actual reductions in some areas. People are have really come to the realization that they've got to do more to prevent. They got to take a proactive approach on dealing with fraud as opposed to a reactive approach once it happens. We're going to talk a little bit about both of those a little bit later on.
Has the recession effect, and with the employment reductions, maybe caused less segregation of duties, or people also just being upset at work? And have you seen an increase from that?
Yes. It's not just government entities either. Everybody is facing cutbacks, and we're seeing a tremendous amount of impact just for the fact that people are being, they're being stressed out to a much greater extent now than they were. I started a case about 2 weeks ago, and that one, well, you can never predict where it's going to go, but this one appeared to be a result of distinct needs on the part of the person who is suspected at this point, financial needs, and the more we got into it, the larger the numbers became, and we're back to 2003 right now, and we're not close to being done. So again, it's one of those things that looks on the surface fairly benign and fairly contained, but it really wasn't. In fact, in that particular case, the suspect came back to their employer and said, "Here is what I took, this, and here's a check to make everything good." What do you think the check was for?
$500.
No, not that. It wasn't that absurd, but in light of what we've been finding, it's absurd. About $16,000. Now, 16 grand came out in the last 3 weeks before she was terminated. And as I said, I think by the time we're done, this one is going to be a very big number. And it was a very simple scheme, and it was really hidden well when you look at how entries were made in the general ledger. And this particular person did not have ledger access. They took care of cash receipts, but they were able to impact all the revenue numbers were accurate because the numbers were going in the way they should have, but She was also in the setup of the deposits. She was using contra revenue accounts that were scattered throughout the general ledger for different revenue categories, and she was putting in debit amounts into there and credit amounts on the revenue numbers and netting it down to what was left after she got done taking what she wanted. So if you look at the revenue as part of an audit, revenue is properly stated. The issue was cash was understated from the standpoint of what they should have had, and in this particular industry, these kind of write-downs are not unusual to see against certain revenue accounts. So nobody gave it a second thought because they weren't out of line. It was actually a pretty slick thing. And I say that only for the fact that I tend to marvel at certain people at how good they are at doing these things. Some people are really sloppy and they get caught a lot quicker. But some are really good at it. And in this particular case, there were no outward signs, no lavish lifestyle, no fancy cars. Nobody suspected. And the people that were closest to her in the organization, well, you can imagine how they felt. They worked with this person, that person had been there 20 plus, almost 30 years, and worked with two of these people for 20 plus years. So this whole thing has got everybody in a state of shock at that particular organization. And we're not done yet. Yes?
Do you think materiality levels kind of, hide a lot of little frauds going on that, could accumulate to large amounts?
The question was, do I think that materiality levels tend to hide smaller fraud amounts? Is that fair? I don't want to say they hide it. What I will say is that financial statement audits, and for those of you, how many have been in public accounting before they went into private accounting? Okay, so we've got a handful of people that have been in the public arena. Financial statement auditing is, under the SASs, you are supposed to design your audit to detect material fraud. And materiality differs with every client. And so in answer to your question, yes, I think it does, but it's not done purposefully to hide it. It's just that the audit process is not designed to search out those kind of things. And that's what hurts in the long run, because you can have an audit, and I find this with board of directors especially those people that don't have financial background. They think if you have a financial statement audit, hey, we're clean, we're good, everything is fine, And that couldn't be farther from the truth. They're materially correct, but they are not guaranteeing that you have no problems. I've got another slide later. We'll look at some of the things that are in place in these companies that got hit in this study. And the number one item in every one of these companies, or about 80% of them, they all had external audits. And they're all in the study. So that kind of answers your question too. One thing that I try and do whenever I get an opportunity to talk to a group like this, or do board presentations or public training sessions or whatever, you can never emphasize enough the difference between a financial statement audit and a fraud examination. They are worlds apart, and you're going to get totally different answers in both of them. One's not proper in the one circumstance and the other one isn't in the other circumstance, but in their own right, they do what they're supposed to do. Financial statement audits are supposed to give you that comfort level that materially these financial statements are correct. Again, materiality based on the individual company circumstance. fraud examinations are meant, first of all, and usually what I end up coming in on, somebody's already got a pretty good idea. Predication has to be there before I'm going to walk through the door and do anything. Predication in layman's terms basically is if you don't have enough information to show me when I come in that you actually have a problem. Sometimes we go on fishing expeditions, that's very expensive. Most of the time, something's blown up and people have now raised questions about a whole series of issues. And that's what kind of starts the process. So we look at things to quantify losses, to determine who's involved, work with the authorities in terms of prosecution, and then ultimately, hopefully, work with the insurance companies to get the refunds back. How many of you are involved in it? Yes.
You just made a comment about working with the authorities. At what point do you recommend your clients bring it to the authorities?
That's a legal question. I don't make that determination. The first thing I tell people when they call me is, first of all, have you talked to your attorney? You got to get your own legal counsel involved first. The second thing you have to do is find out what kind of insurance coverage you have. I've had instances where companies have had insurance, but they had some memos that came out during the investigation that indicated that they knew about this pretty far back and didn't do anything. And they had insurance coverage, but it was voided because they did not meet the notification requirements. That's the second part. Get the legal counsel involved so they can make that determination. My experience has been a lot of times, some people want the police in right away. They want a police report, they want to file a report, and they want to squeeze the last ounce of blood out of that person because they've wronged them. We see a lot more of that now than we used to see. But the reality is, sometimes you're not in a position to do that until a little bit later, once you've got your arms around how big the problem is and whether or not there's going to be any restitution issues. You've got all these reputational things to consider too when you have a fraud occur in your organization. It's not just the loss of the money. You've got internal issues in terms of your employee base. You've got external issues in terms of public perception. Again, depending on the type of organization, if you've got a massive fraud, that could hurt your sales, as well as any number of other things that public persona has some kind of an impact on. So, we help identify what the losses are, but the impact is much, much wider. Did I answer? Is there another one? Somebody else? Okay. I touched on this one a little bit earlier. This one talks about the frequency of the types of occupational frauds. Asset misappropriation. That one is the most common because it's the easiest one to commit. One person can do it if they've got access to any kind of asset, be it inventory or petty cash. Any number of different assets of the organization can be misappropriated much easier and at a much smaller dollar level than what something might be on a financial statement fraud or a corruption case. Corruption is a unique animal in itself, in that it takes at least two people to make those things work, most often. In fact, every time. I can't think of any corruption case I've worked on that hasn't involved 2, 3, 4 people. If it's going to be somebody stealing off the shipping dock, stealing inventory off the shipping dock or working a deal with one of the transport companies, there's got to be 2 people. All right, if you think about just the nature of what this is. Corruption is the biggest occurrence in government frauds that are reported, as you can well imagine. That's what makes, again, Dixon so unusual in that she did this one on her own. Nobody else has, well, at this point, nobody else has been implicated. Nobody else has been charged. When I first saw, some of the basic information on it, and I read about it in the paper before I actually got down there to meet some of these people, my first reaction was, this is ridiculous. How could one person have gotten away with that much? The second response that I had as I looked at it is, how is this city not bankrupt? General fund budget of the city of Dixon, you can go out and check it out online, $12, $14 million a year. That's the general fund budget. That's where all the operational things go. What was being done was through capital project type activity. That's how it was being hidden. So again, it's, but you look at some of these things and you think to yourself, how on earth could one person have pulled that off for as long as she did? And it always comes back to the trust factor that everybody in that place put in her. I think I've done cases out in California and Florida and New Hampshire and Colorado. If you go to the coast on either side, those people are much more skeptical and less trusting than what we are here. We tend to be nice people, except those that are stealing from us. So, again, it's one of those things, though, that different parts of the country view things differently. And I testified in a case in San Bernardino County, Oakland, the Oakland area, 2 years ago. And it was an experience for me. Because they do, they always say they do things differently in anybody from California? Nobody? Okay. They always say they do things differently out there, and boy, they do. It was a whole different atmosphere in that particular courtroom and working that particular case than what we would see, say, here. And it's just one of those things. You have to experience it to know what I'm talking about. Yes?
Is it more common that the fraud is caught by an internal person by accident or by your external auditors? Is there any one way that?
Okay. The question is it more common to have somebody external as opposed to somebody internal, like, say, the external audit, catch these frauds? And the answer to that is, and I'll touch on, we can talk about that right now. Tip is the number one way that people find out about it, and that has happened in the last 6 years. That has picked up so much, and I've been really happy to see it. When we started our forensic practice at Whitley, we decided that a hotline was absolutely necessary, and we put one together and we made it available. Unfortunately, when I did the background checking to see about the hotline, AICPA said that does not infringe on independence. 4 years after we started it, they come back and they say, they issued it was a short memo in the Journal of Accountancy on somebody questioning whether or not this impaired independence, this kind of activity. And now suddenly everybody got excited and said, you can't do that. And this is a personal commentary. It's got nothing to do with what I was coming here to talk about, but sometimes The left hand doesn't know what the right hand is talking about because I got two different answers from the same section that was supposedly giving this expert advice. But back to your question, tip number one. 6 years ago, what do you think was number one? Anybody? Yes.
Trying to get me back to calling it 911.
Well, you're assuming that somebody's got a number to call, so that kind of is a tip line. No, but I appreciate what you're saying. Yes.
By accident?
Yes, by accident. Stumble across it, slap you upside the head. Oh my gosh, what happened? 40% 6 years ago were by accident. That's a bad number. That tells me people don't know what's going on in their own organization. Now, that thing has turned. Now we're seeing 40+% coming from tip. The by accident number has dropped down under, I think it's under 20 in this one. But again, it's a function of people becoming more aware. Tip lines are becoming much more popular. They're not that expensive. When you start to look at the impact that they can have versus the cash outflow on an annual basis to set up a tip line, I mean, you've got to have it. It's like going without insurance. You wouldn't do that. Well, I shouldn't say that. Some people do. And I think I started on the insurance angle before and I never finished it, but remind me later. We'll talk more about insurance too. This is the median loss on a basis. You look at the frequency numbers on financial statement fraud, they're the lowest. You look at the losses, they're the highest. There's an inverse relationship. And again,
2010.
What's that?
What happened in 2010?
You know, that one, you know, I don't remember what that was. But oh no, I know what it was. There was a mining company and it skewed everything. The mining company had like a $14 million loss or fraud, theft that happened. And yeah, that's what it was. It was a mining operation. You look back, mining was still leading the median loss this year, but it was only 500,000 or 600,000. But again, you think of occurrence versus impact. Who do you think commits those financial statement frauds?
CFOs.
What's that?
CFOs.
CFOs. Absolutely. Well, CFOs to some extent, but usually the top guy is involved. You know, and you think about some of the pressure that you come under in a where you're starting to think about a financial statement fraud. How many? Well, I'm not going to ask that because then you'd be disclosing something. If you've got lines of credit and your lines of credit are coming up for renewal, and you've got to have a certain ratio that has been set up in your loan agreement that you have to meet. And if you're not going to meet it, you stand to either have the interest rate jacked or they'll call the loan period. Those are the kind of real problems that people face now, especially as business was kind of going in the tank for a while, and for some it still is. But if you can't meet your covenants in your loan documents, what better way to make it look like you did than to cook the books? And when you think about it, you don't really need a lot to make that happen. You got a printer and a computer, you can make it happen. Depending on if you're audited or not. But then again, if you were like Rita Crunwell, it didn't matter. She made it happen even with an audit. This one is interesting. This is the duration of fraud based on scheme type. And this particular scenario, I personally don't believe, only for the fact that these numbers are too short. Remember I said before, 24 to 36 months is the usual time frame according to this study. Most of the ones that we end up investigating are minimum 4 to 5 years that things have been going on. So I question the nice, neat 24, 24, 24. I'm not buying that. But that's what they submitted. But again, payroll scheme was the biggest one. They're check tampering. Then you got financial statement fraud. What are those first two? What category do they fall into? What's that? Asset misappropriation, right. In fact, you'll see corruption down there, third from the bottom. You'll see financial statement fraud, third from the top, and all the rest of them are asset misappropriation. As I said, they're the highest frequency in terms of occurrence and usually end up with the lowest amount of loss because lower level people are able to do those things. You've got to be higher up in the food chain to make the big hit. A CFO or CEO is going to be able to make that financial statement fraud number work for them. You know, the accounts payable clerk isn't, but boy, he or she can have some fun with fictitious vendors. You know, who knows? But again, this is what they say is reality. I think the duration is much longer. For all of us in here who are in the accounting department, 22%, and that number stayed steady from 2010. 22% of the frauds reported in this study in the last 2 cycles, perpetrator came out of the accounting department. Now, why do you think that is? Access. Knowledge.
They prepare the financial statement.
Yeah, but remember where most of the activity is going to come from. Think about it from that perspective. Asset misappropriation as opposed to financial statement fraud. So as they get more in tune with how the systems are working, and then you think about it, everybody's having to cut back. There's been layoffs. And they are not just laying off in the factories, they're laying off in the office as well. And so now what had been a segregation of duties that was acceptable may not be. Because now you may have somebody else doing 2 things that are incompatible. All right? The point being is that the accounting department has access to a lot of stuff that nobody else in the organization does in terms of asset misappropriation. Red flags of perpetrators. I had something else here on that. You can see the first one is, and the most obvious, if people are looking at it and being realistic, living beyond their means is the number 1 red flag in terms of perpetrators tipping somebody off. Okay? Financial difficulties. Obviously, if you think about the fraud triangle, everybody know what the fraud triangle is? Anybody know what the fraud triangle is? All right, I'll get to that, I think, very shortly. It's right there. It's coming up. But if you look at these things, if you think about your own organizations, these things could start to cause your mind to go, oh yeah, that's right. But remember, a red flag does not mean that there's fraud going on, any more than no red flag means there isn't a fraud going on. All right, so you got to be careful how you interpret these things. All right, what can happen? Well, we kind of know. I've already given you the answer to this one. Accounting. I want to walk through a couple of things here, but before I do that, I want to read you something that I thought was interesting. No, here it is. Okay. 2011, corporate fraud cases that the FBI is dealing with, large corporate fraud, they're on the increase. Big surprise, right? This is the part I thought was interesting because, you know, a lot of people have been complaining that we haven't been hard enough on the perpetrators of these large financial institution frauds that have hurt so many people and taken away so much from so many. This is how they deal with it in China. I thought it was a little surprising to me. I did not realize this. In China, the former president of the state-owned Shanghai Pharmaceutical Group, now, you talk about a severe sentence, was recently sentenced to death for taking almost $2 million in bribes and embezzling $5 million. Unfortunately, I mean, this is bad for this guy, and but when you think about how our country handles some of these things, it's, in some cases, a slap on the wrist, and they walk away, which I don't think is fair either. Now, you talk about one extreme and the other. You're going to execute a guy for $7 million? Who knows? Maybe he could have paid it back. I don't know. Jail time seems like pretty easy time now when you look at that kind of thing. There are other situations where things have gotten much more dire. You know, there are other countries that have very strict laws about certain things, and there's no bending on it. Again, with all the progressive things that have happened with China, I was a little surprised to find that one out. That one did surprise me. I got a couple of examples here that just have some facts, and we'll just talk about these quickly.
I've got a question.
Yes.
Normally, the guys don't go to jail, the upper level management. They pay penalties. To the extent that it becomes a cost of doing business, does that give more of an incentive to have these things happen?
Yes, especially when you think about international operations. A lot of stuff can get slid under the table that way. Foreign Corrupt Practices Act has worked to tighten that down, and they've done a better job. How many of you have international operations? A few of you. Any of you aware of FCPA and the impact? I got one head shaking yes over here. Well, for those of you who have international operations and you're involved in any way, shape, or form in the accounting for that, it probably would behoove you to find out more about FCPA. Foreign Corrupt Practices Act. It's been around for a while. The enforcement has taken on a whole new meaning, though, in the last few years. And we also have the UK Bribery Act now, which kind of goes on top of what the FCPA was saying. Their UK Bribery Act makes it even harder on you if you don't do what you're supposed to do from an international business perspective. And how they get jurisdiction is kind of interesting. You know, you might want to read up on that. It's a problem if you don't know what's going on, because you can, for example, if you're using a manufacturer's rep in China and you're outsourcing, pieces that you're going to manufacture ultimately or assemble over here, but they're manufactured over there, and this particular person's taking care of it for you, and they get involved in some wrong things, who do you think's going to pay the fine? Who do you think's going to get hung out to dry? It's not going to be that guy over in China. It's going to be people over here that are responsible for making that decision to do business over there in the first place with that person. And that's why I say if you're involved in international business, you got to know about what that is, at least the basics. All right. I put two of these in here because they're very simple, but it gives you an idea of how easy certain things happen. Bookkeeper overpaid tax deposits by $300. Who even thinks about $300, right? In the grand scheme of what you're working with every day, is $300 a lot of money? I'll answer it for you, no. It is to my son and daughter, because that would make a big difference for them. What this person was doing was basically picking up an additional 15 grand a year of tax withholding. They had controls in place. Bank statement, this is a small organization. Bank statements were mailed to the CEO's home. He or she reviewed all the cleared checks in the bank statements themselves. CEO signed and distributed all 4 payroll checks. How many people only have 4 payroll checks? I said it was simple. Check requests for tax deposits are prepared by the bookkeeper. Check request and prepared check for the CEO to sign. CEO noted tax deposit cleared on the bank statement. What was missing? Somebody said, anybody? Yes.
A reconciliation of what was the supporting documentation.
What supporting documentation?
Tax calculation against what the withholding is supposed to be searching for.
Okay, and how are you going to know that?
Well, depending on what their withholding requirements are, you should be able to calculate what the tax is.
Okay. What would be the you're right. You're right too. You got to do some reconciliation work on this. But what the red flag issues here, they weren't going back to the payroll tax reports and the W-2s back to the actual payroll calculations themselves. There's another one that I've used as an example. Same kind of setting, except they use an advance function with a third-party payroll. How many use third-party payroll processing? I would expect a fair amount of you. Okay. What they did in that scenario was use the advance function and then a negative check amount so that all the payroll information came out perfect. And the net payroll came out perfect. The withholdings came out perfect. What do you think didn't come out perfect?
Money's not paid back in with the negative.
What was that?
Money's not paid back in with the negative. If they're getting advances.
Right, but what do you think that negative check was doing? What's that?
Balancing the check.
Balancing the payroll run, yes. And this person with the negative check, taking that extra money, the negative check offset it, so what do you think the net payroll looked like? Looked like it should look, right? Everybody got paid what they should have been paid. The net payroll on the payroll reports said what people expected it to say. Where did they fall down on that one?
What was taken out of the bank?
Perfect, yes. What was taken out of the bank? Nobody bothered to look at that. They looked at payroll reports. They said all those look good. That's, this ties in with our personnel files. We know that these people work for us. We know they put the hours in. But nobody bothered to look at the bank statement to see how much money was being drawn out on a payroll by payroll basis. That person got away with almost $900,000 before they figured it out. Again, fairly simple. You got to give some of these people credit because they do some homework to figure this stuff out. I thought this one was kind of, well, not funny, but I thought it was interesting. This bookkeeper, again, small, I'm trying to keep it simple because that way I can best understand it. $25 check to the spouse's business in erasable ink and altered it to $35,000 on the day that she retired. Now, bank transfer for $35,000 from an interest-bearing account to the operating account was authorized on March 17th by the CEO, but the transfer never happened. On 8/17, the day the bookkeeper retired, the date on the authorized 3/17 transfer was changed to 8/17. What do you think she had to do that, make that happen? She altered the check for $25 to $35,000. Now, obviously, that one ended up getting caught, but if you think about it, where did this one break down?
Erasable ink.
Well, the erasable ink issue, but where it broke down before that.
Why wouldn't the check, they're going to turn it in there?
Okay, but back up further than that.
The transfer is authorized, but no one kept track of what there was.
There you go. The transfer was authorized, but nobody bothered to see if it actually happened. That 35 grand should have been transferred on March 17th. All somebody had to do after they authorized it was make sure that it actually happened. That's where it broke down, at least from the standpoint of allowing it to continue to the point where it did. All right. Let's talk about a few other things that are near and dear to my heart. Which one do you want to talk about first?
Cattle rustling.
Thank you. I was going to pick that one, but you were set up. The cattle rustling scheme was one we did about 4 or 5 years ago. And this was done for a single location of a multi-state operation that runs cattle auctions. There were 17, I believe, different locations in multiple states from here out to the West Coast. And in this case, one guy who was earning 40 grand a year embezzled 6 to 12 cattle at a time, $3.5 million over 6 years. And again, you know, this sounds so absurd. And we got called in. Somebody else was doing the investigation, but they couldn't get their arms around the whole thing, why the pieces didn't quite come together. That's how we got involved with it. And I remember doing one transaction was about this much paper. And I brought that to the district attorney to this meeting, trying to explain to him how this thing worked. And we weren't 10 minutes into the presentation, and he was looking out the window. It was just one of those things, it didn't make sense to him. It taught me a lesson. My reports now, especially when I know we're going to court, they're geared towards an 8th grader. Because you're going to have people on a jury that do not understand financial issues. So you've got to bring it down to a fairly low level to make it clear and understandable. That particular district attorney, when I saw that he wasn't getting it, I said, why don't we break for an early lunch, give me about an hour and a half, and then we'll meet again after lunch. So what I did was take, we use a lot of flowchart, Visio stuff in terms of roughing out what's going on when we do these things. I found a cow head or a steer head, horns, the whole thing, and a money bag picture. So I had these 2 pictures. And when I brought it to him after lunch, I said, okay, follow the money bag, follow the steer, the head, the cow head. He goes, oh, that's easy. And I go, no, it isn't, but at least you're getting it now. But in that particular instant, that particular individual had 2 different offices snowed in terms of the trust factor. In fact, what he was doing was walking it across the hallway. He would get a check cut from one company because there were multiple companies involved at each of these locations. They had different functions. And he was stealing the cows and then selling them back to the one company, who then was selling them to the other company, who then was running them through the auction a second time. The thing was just a nightmare to track. And I remember the first time when I flew to this location to meet with these guys, they took me out to the stockyards. Now I'm dressed in a 3-piece suit, tie, nice shoes, and we're traipsing through this stockyard. I learned another lesson on that one. But the whole idea again on this was that this particular individual had the trust of multiple people in 2 separate entities. And he literally would walk this paperwork, this doctored paperwork across the hall to get these checks cut. But then he would negotiate those checks. He'd actually, in some cases, he actually moved the cattle off-site because there was a guy, a trucker, that was in on the deal. And here's this guy with a $40,000 salary. His wife made about $35,000. They made combined income of about $75,000. They suddenly have this cattle operation on 35, 40 acres of land, new barn, all kinds of stuff going up. Of course, he also was inviting his co-workers to his house for parties. They had a pool. They had, and this is the only time that I was ever asked to go on what amounts to a raid with the county sheriff's department. And I kindly declined to do that. But they wanted me to tell them what things to take. And I said, take everything. What we don't need, we can give back. I'm not going with you. Just take it all. But what happened there is that when they got to the house and they and they served the search warrant, and they went in and they got all the financial records, they also found, what did they say, $35,000, $40,000 worth of liquor in cases stacked up in the basement. And according to a couple of the officers that went on the raid, enough pornography to stock multiple stores for a couple of years. That's where this guy was sinking a lot of that money into absurd things like that. But the big money was coming in as he moved the cattle. Now, how do you think they caught him? Ultimately. Well, he stubbed his toe with one of those walking across the hall things. and you didn't get it to the right person, because the right person had something else that came up and asked somebody else to take care of it, and they questioned it, as they should have all along. But the other part that was so telltale, this organization was audited. Nobody noticed that out of the 17 different stockyard locations, now $3.5 million to this location was chicken feed. Did anybody get that? It wasn't much. They ran hundreds of millions of dollars a year in cattle through that one location. So $3.5 million over 6 years was not a big deal. What nobody noticed was that, now think about how an auction operation runs. Anybody familiar with auctions? Car auctions, cattle auctions? Are you going to have inventory? Are you? How long? Not very. Okay, not very long. Are you going to have accounts receivable? Well, if you got inventory, you better have accounts receivable, because you're not going to let the cows go until you get paid, right? This location had a buildup, a constant buildup over that 6-year period of inventory and receivables. Nobody in the other 16 or 17 locations had anything other than a 2 or 3 day lag between the inventory being shipped out and the cash being received. But nobody caught that. Nobody bothered to look beyond what didn't make sense. They just said, well, I shouldn't put words in their mouth. I don't know what they were thinking. It was probably immaterial, pass. Anybody ever in public accounting write that on a work paper? That's what they probably did. At any rate, nobody caught it. And it allowed to go for 6 years. Now, it was, as I said, a very complicated situation to try and explain to somebody. How do you think this guy got ultimately caught, or ultimately brought to justice? Anybody remember a guy by the name of Al Capone?
Tax evasion.
Tax evasion. We looked at his income tax returns, and this guy was generating big number in and an even bigger number out, and creating a loss that offset the $75,000 of income, and he never paid any tax. When in effect, he had $3.5 million of unreported income that he ultimately got caught on. Now, I can still remember getting the call from the DA saying, we're not going to prosecute. And I'm thinking, you... It's okay, I got paid. I don't care if you prosecute him.
What state was it?
I can't tell you that.
Why
Well, I could, but...
Why not? Why not prosecute?
Minnesota.
So?
Too nice.
Minnesota Department of Revenue decided, though, that they wanted a piece of him. And that's how he was brought to justice. You know, again, you look at how things work out sometimes, and his sentence was, I think he got sentenced to 7 years for his tax evasion. He ultimately did get charged under a couple of different theft statutes, and Minnesota has different ways of a person's greed. Now, he had one other issue going. He had gambling, he had porn, and he had liquor. The gambling thing, I've never seen this before, probably, hopefully never again. He had a stack of players' cards in one of the boxes when the police brought all the stuff back. Players' cards from different casinos, this thick with a rubber band around them. One casino which we contacted and got information from, he had run about $1.5 million in transactions. Now, that doesn't mean he won it. Might have meant he lost it, but, you know, anybody ever been to a casino and understand how those cards work? It tracks what you do. Evidently, he was there a lot. But he was there at a lot of places a lot. So, yes?
I saw on the number one indicator or red flag is living beyond your means. Is that ever actually, it sounds like that's an after the fact for the most part. That's not actually what's flagging auditors necessarily, but maybe, is that true, or do you ever, I wouldn't know how to audit for that, I guess.
That's not, you're not going to see that as an auditor. What you're going to see that is as a fellow employee. I had a financial institution case a few years ago, and it's not the one on top. That one is interesting too, but for different reasons. That particular case, about $750,000 was misappropriated through different types of loans that were being administered by one person. Now, think about segregation of duties. Is it a good thing or a bad thing to have the person take the application, approve the application, and disperse the funds? What was that?
Trifecta.
Trifecta. Yeah, and it's not a good thing. But it was going on there, and the reason was that loan program, and it was a very specific loan program through, I can't remember if it was the state or the federal government, but it was so small in terms of the overall loan portfolio of this institution that nobody gave it a second thought. It wasn't even brought up as part of, you know, loan committee meetings for that matter. She was doing everything herself. But going back to the idea about, you know, the living beyond your means, she bought a condo in Florida and took numerous bank personnel down there numerous times for junkets. You know, they go down there and they party and they fly back again. She was picking up the tab. And nobody ever thought about it because she said, well, I inherited some money. But if you looked at the lifestyle thing, none of it made sense. And people actually got a first-hand look at it and still didn't do anything. Eventually, yeah, but you know, it did come out that, okay, now that makes sense. To audit for that, you know, short of asking some questions and poking around into something that maybe you don't or shouldn't be into, that's about the only way you're going to even have a hope of finding that one out. So, our cattle rustling guy, I can't remember, 6-7 years he got, and he has a restitution plan. The state of Minnesota was successful in prosecuting him for tax evasion. I never did hear if the feds went after him and did the same thing. I have to think so, because normally one will share with the other. And it may take a couple years, but eventually everybody gets their pound of flesh on that one. How long do I have? 6:30? Because I got... We could talk about these stories all night. Because all of them have their own twist to it. But they all come back to the same thing. People were being trusted to do the right thing. And those people that are doing the trusting, unfortunately, the trust factor was there, but they basically excused themselves from any other responsibility because they trusted them. This one and this one, all somebody had to do was open a bank statement once and look at it, and they would have said, what the heck is going on here? Nobody did. The lack of segregation of duties, especially as things have been contracted over the last few years, is just remarkable in terms of the opportunities it's created. All right, real quick. When I do large groups, I usually throw this one up there fairly early. I tell people, okay, pick out 3 other people and keep them in the back of your mind as we get into this discussion. I'm assuming that you would consider yourself one of the 40% won't steal people. Maybe not, I don't know. This was a thing that was done back in the late 80s. But it's important for the fact that it shows just how much is going on that people don't realize. Now, one thing I will say about this, it wasn't quantified in terms of the amount of loss. It was like if you stole, $10 out of the petty cash and you're honest and you tell people that you stole, you're in that 30 or 30 section, okay? You didn't have to steal $500,000 to be in this equation. So it's skewed a little bit. You go to the supply room and take home pencils and paper for your kids when school starts. Technically, that's occupational fraud. You took assets belonging to the employer. But it's going to reflect in these statistics. Either way, it's staggering when you think 6 out of 10 people in your workforce are either stealing or will steal from you. It's a scary thing. And those of us who are charged with prevention in our companies, you got to start thinking differently if you haven't already. Yes?
Well, the investigation has been done. Does your fee at the end come down, or not the fee, I should say, does your consulting service end once the investigation's done, or do you provide them also, like, here's what you need to put in place in order to prevent this from ever happening?
It depends on how much money they want to spend. Normally, people want the answer as to how much damage somebody did to them. And if they've got proper insurance coverage, they're going to get all that back. And if they've done their homework, they're also going to have a rider on that employee dishonesty policy that covers a certain amount of out-of-pocket cost for investigation. That's one thing. All of you, if you haven't done it or you're not aware, go back and find out how much you've gotten coverage, and do you have a rider that will cover investigation costs. These kind of investigations get very expensive very quickly. So, it's well, let's just leave it at that. They get expensive. You need to know what you're getting yourself into, and I would say if you think you've got enough insurance after you look at it, jack it up at least 50% because you're probably wrong. And if you look at the incremental cost versus the exposure you're taking on, there's no comparison. You need to look at that very carefully.
But do they not, do the organizations not care that they still have that gaping hole or things like that?
No, they care, but, and I hate to say this, but I've got a slide up here now that, again, things that change after, we will give people recommendations. Because some of this stuff is just so ridiculous, you, first of all, can't believe that somebody didn't see it before and hasn't acted upon it yet. And so we tell them, this is what, we think you should do. Or this is an opportunity, I don't put it that way, but it's an opportunity to tighten the control framework. And in the case of that example where somebody could have opened the bank statement That one cost them nothing. But it's one of those deterrent features that are so critical in any internal control structure. If you've got the threat of being caught, you're a lot less likely to take liberties. Now, if you're going to put one of those deterrents out there, you better make sure that from time to time you actually do them. If you're going to have a surprise audit, you better be doing a surprise audit. And one of those other cases that were up there, the surprise audit was always the same week of the month. So all they had to do was guess which of 5 days it was going to be on, so they knew to keep things straight for that week. That was their surprise audit. And in that case, the internal audit department, there was staff of 4 or 5 that were responsible for this particular location on the surprise audit cycle. They were all reprimanded for the fact that it wasn't a surprise to anybody except them when they found out they had been had. So, anyway, keep this one in mind though. There's a reason theft is so prevalent. It's human nature to a certain extent, but for those of you who haven't seen this, here it is. The fraud triangle. You can't have fraud happen unless you got all 3 of these things happening at the same time. There's got to be some kind of pressure on the part of somebody to need the money. There has to be an opportunity to get the money or asset, whatever it is they're going to do. And finally, they have to be able to rationalize that what they're doing isn't wrong. Now, of those 3 things, if you think about it as a 3-cornered stool, you pull one of those legs out, the stool can't stand, right? First time the fraud happens, all 3 of them have to be there. After the first time, attitude or rationalization goes right out the window, because now you've already made the decision to steal. So that one doesn't even enter into it. As long as you still have the need and you still have the opportunity, you continue to do it. That third piece drops out of the equation. It's only applicable at the time when they are making the decision to do it the first time. Let's talk a little bit about what you can do now to get yourself ready for this stuff. Fraud incident planning. We talked about some of this already. You have to be able to respond to suspected fraud. There's a right way and a wrong way to do this. And if you think things are happening, that predication issue, you've got to go in and you've got to look to see, is it real? If it's real in a suspected scenario, then you're into that second line, respond to the discovery of actual fraud. Remember this is kind of like the trust thing. It's not a matter of if it's going to happen to you, it's a matter of when you're going to find out and how much is it going to cost you. Yes?
So that's true in organizations even that have great internal controls?
Yep. Yes, it is. Because there is always somebody that has that opportunity to do that. No matter, it may be the CEO. So that's just the harsh facts, ladies and gentlemen, because it's there. And anybody who thinks it's not happening in some way, shape, or form in their organization, it's time to smell the roses or drink some different water, whatever it is, the saying, because it's happening. Yes?
I guess, I'm still in college and I'm probably more of a this, but what would you do, if you're an accountant, you're approached by the CEO or the CFO, and they want you to mess with the bottom of the books for the year-end statements, and it could cost you your job, and what you're thinking in this situation?
Well, if you have a hotline in place, it's an easy answer. Because now you've got an unbiased, independent source that's going to take your information anonymously. Okay? That's the best of all worlds in that scenario. If you don't have a hotline, then you've got to figure out, okay, who can I trust that isn't part of the potential plot? And that's a hard call. A lot of times people will end up going to a member of the board of directors if they're that uncomfortable with going to an immediate supervisor or the person who's one chain up from their supervisor. But that's a difficult call. I can't tell you this is the answer. Unless you got a hotline that is anonymous. Some companies have hotlines manned by the personnel department at the company. How do you think those work? They don't. If I've got something wrong and I'm going to tell somebody about it, I don't want to tell somebody who maybe is involved in it or knows who I am and there's going to be some retribution. I know there's not supposed to be, but the reality is sometimes there is. So, is that mine? Oh my gosh.
Go ahead.
That's okay. It was my daughter. She's an Edgewood grad, and I thought I normally tell people, put these things away, turn them off. Sorry about that. All right. Not a question of if, question of when you're going to find out. And when I say that, I'm not talking about the $3 million one. It might only be $1,000 or $10,000 or whatever. But something's going on in every organization. You are not the exception where you've got only the 40%ers in your organization. Okay, yes?
A big area is expense reports.
Yes. Do you want me to tell you a story about that? Or do you have one? I'm assuming reports that you've reviewed, not ones you've submitted?
Yeah.
Okay. I'm sorry, what's your question?
I had that case where I was reviewing an expense report and I saw a charge on there that was not proper. And the controller of the office wanted me to accept it, but I went to my office and told my management, and they got the ball rolling. And they worked out that it was a trader selling oil and gas that paid for prostitution, and he ran it through his expense report, and it was I guess it was an accepted practice, but I didn't.
Yeah. Oh man, I don't even know where to start with that one. Expense reports are a huge issue. That's why if you think you don't have anything going on, go there. You'll find something. I guarantee it. You will find something. And therefore, my statement is accurate. I had the largest expense report scheme I've investigated was a $1.3 million single person over the course of 4 or 5 years. And you would know this company if I told you the name. It's a well-known company. This particular individual was in a special, it's kind of like that lady with the bank thing, where she was the only one handling all this stuff because it was so small. Same thing with this guy. He was charged with developing a new product, new service line for this organization. And it involved a lot of entertaining. And his expense reports were extravagant. But he always had the ace in the hole because the founding shareholder of the company was signing his expense reports. Does that sound reasonable? This is a big organization. You think this guy is going to come in and say, Mr. CEO, founding person of this organization, review my expense report? What do you think the odds of that one happening are? When we looked at it, the signatures weren't even close. Weren't even close. But nobody in the accounting department challenged the fact that this guy's name was on the approval line. You know how this guy got caught? I don't know if any of you noticed before, I had a line up there, Go Pack Go, way at the bottom. This company is based out of Colorado. The Broncos were coming to Green Bay to play a game late in the season, and he took 10 or a dozen people, paid airplane tickets, hotel, meals, everything. But they didn't anticipate the severe weather in Green Bay. So he went out and bought them all fur coats or leather coats to the tune of about $2,200 to $2,500 a piece, and ran it through on his expense report. Now, he really didn't buy them the coats, but that he said that he had. All the other stuff he actually did. Somebody said when they looked at the expense report, I've had enough. I can't believe that. Look what he's trying to do now. And then evidently somebody said, yeah, but look who approved it. I don't care. I'm going and I'm talking to somebody about this. He's doing time right now. It was 1.3 million, and I want to say his sentence is 5, 6, 7 years. But it was, again, a trust feature on the part of the people processing accounts, the expense reports. This has got to be okay. This guy signed it. Nobody ever stopped to think, this guy's never around. And why would he sign only one expense report? So, again, the expense report schemes are very simple. I personally had an opportunity to dismiss one of our employees many years ago for falsifying expense reports. And I'll never forget it, because one of the hardest things you have to do is stick to your guns. You can understand that they made a mistake. You can feel empathy. But at the same time, you've got to set the example. Somebody has done something they shouldn't have done. And if you let one person get away with it, what do you think is going to happen when the next time it happens? You put yourself in a very uncomfortable position, potentially a legal position, because now you've done something one way and now you're going to do something different for the same set of circumstances. That doesn't work. And I'll never forget having to walk this person out. You know, and I said, if you had come and talked to us before, we would have advanced you some money. We would have made you a loan. We would have done something. She was a good employee. But when something like that happens, you have to do the right thing for the organization, no matter how you feel personally about it. And, you know, sometimes those are the hardest decisions to make. I've got one other real quick story about one case that we did this year. Now, this is the height of what I consider to be forgiveness, stupidity, naiveness, I don't know what. This lady got caught stealing. She said the reason she did it is that she felt she was very underpaid, that rationalization thing. Okay. They agreed with her. She got caught the first time, pleaded her case. They didn't prosecute. They said, you're right. They gave her a raise. I'm not kidding. They gave her a raise, brought her up to where they all agreed she should have been. But 18 months later, she got caught again. And the same excuse was, I'm not making enough. I do too many things for this organization. I deserve this. Now, they've already given her a raise one time. They didn't give her a raise the second time. What do you think they did?
Bonus?
Bonus? Somebody say bonus? No, better yet, deferred comp, pre-funded. And I'm thinking, you gotta be kidding me. But she got caught a third time. And that's when we got called in. And they were done giving her raises, deferred comp, and she had the nerve at her termination to ask how she was going to be paid out on the deferred comp. I kid you not. It's, people have a whole different way of looking at things. All right. How many in here have done, yeah?
I just wanted to make a comment. I've investigated internal theft and problems inside of organizations. And when I start to believe that it is happening or something's happening and I want to start the investigation, I engage the individual in some questioning. And many times they're flamboyant people that I'm talking to and investigating. And I'll ask them about, just very generically about the transaction or what's going on. And they'll tell me the story of what it was, and I just nod my head and listen. Bring them back in about another month later, and I ask the same question again. And I'll get an answer, and I'll let it go another month, and I bring them in again. 3 times I ask them the same question, and every time I get a different answer. Because if you're lying, you don't remember the lie you told the last time. And if you're telling the truth, you can reproduce that same story all 3 times because that's what happened.
Because that's what happened, yeah.
And so what you do is bait them early on. This is early on when you're starting to investigate something and you want to make sure that it's happening or what's happening. And you get a series of these going and they don't catch on.
They don't put 2 and 2 together.
Correct. And by that time I now know it's true and I now know what I'm looking for, and then I start to gather the paperwork.
Yeah.
People cannot remember their lives.
We've got a big sign on the wall down in our rec room, and it's a Mark Twain quote. Always tell the truth. If you tell the truth, you don't have to remember anything. It's exactly what you're talking about. And this, for those of you who are interested, who, you do interviewing, all of us do interviewing at some point. There's a book I picked up, it's called Lie Spotting. I don't know if anybody has read that book or heard of it. It's by a lady by the name of Pamela Meyer, M-E-Y-E-R, and it's a very, I don't want to say low level, but it hits the stuff you got to know as you're thinking about how people are reacting to you or you're questioning somebody. I would highly suggest that you get a copy of this and you read it. It's interesting. Even nothing else. How many of you have kids? I wished I'd had this book a long time ago. No, my kids are great kids. Was I supposed to say anything else? No, they are. They are. One's an Edgewood grad too. So, but Lie Spotting. Pick that book up. Take a look at it. It's a paperback, maybe about this thick. It's not a hard read. And once you get into it, you go, oh yeah, oh yeah. That. It'll be one of those. You'll start reading it and you'll go, I want to finish this. Okay, we got 10 minutes, 7 minutes. There's a lot of stuff we're not going to cover, all right? But I'm going to jump to the back of this and cover a couple of things, the last 3 slides. We start talking about risk assessment. I'm sure all of us in this room have had some experience with some kind of risk assessment, one way, shape, or form. Am I right? I mean, that's just a way that you have to address things nowadays. That's a proactive approach to fighting fraud. You can't accept the risk unless you know what it is. You can't respond unless you can identify it. And you can't mitigate it unless you understand what the heck it is and how it's working. The last one, though, is the one I want you to remember. There's 4 ways of handling risk. Ignore it, hope it doesn't bite you, insure against it. Well, that can work, but you can't insure against everything. And now I'm talking more than just fraud. Accept it. In other words, you've identified it, you know what it is, and you're going to live with it because you don't think it's worthwhile to spend any more resources on it. Or you manage it. Managing it involves the first 3. Not so much the ignore one. It's got to be fairly small to ignore it. But that, in a nutshell, becomes a basis for risk assessment. These are the things that you are going to end up with when you do one. You know what that is. How many have ethics statements? Number of you? Okay. How often are they reviewed and brought to the forefront for the employees?
Not frequently, no.
Not frequently? Once a year? Annual? Maybe. Okay. You know, that, for those of you who don't have one, you ought to think about it. And it has to be ingrained into the thought process of the organization. Ethics statements only are going to work if people, first of all, are aware that they're there, and secondly, that everybody in the organization is being held accountable to abide by them. Fraud policy. How many have fraud policy? Anybody have a fraud policy? 1, 2. Fraud policy is different from an ethics policy in that the ethics is laying out what you shouldn't do or should do. Fraud policy deals with if you screw up and did something wrong. It's a step-by-step process or procedure that is outlined as to how you're going to handle an incident of fraud in your organization. Anybody who wants some of these slides, I'd be happy to email you if you want to leave me your card. I've got some cards of my own up here. You can just take one of those and use my email address and send it back to me. That way I can be sure I won't screw the email address up. Conflict of interest disclosures. One case recently where, had that been done, people would have looked at it and said, wow, she's got no business being in the middle of this because she's in the middle of that. Now, they're only as good as the honesty of the people providing them back to you. But again, it's one of those things that if you're not asking, you're never going to know. So you see these more commonly in governmental entities. Okay, we talked about this one. Tip, there it is. 43%. Source of tips. This one's important to remember. You don't just put the tip line out there for your employees. You put it out there for everybody you do business with, and in some cases the community in which your plants are located. You want to be a good corporate citizen, this is a real good way. A lot of people have said to me, we can't do that. It makes people think we've got a problem. That's the farthest thing from the truth. You have an opportunity is what you have to show the community that you're in that you're serious about doing things the right way. This is a very positive thing for any company to have. SEC registered companies have to have hotlines. Why doesn't everybody else use them? They work. Yes.
Previous company I worked at, we owned convenience stores, and we got a call from the Colorado State Lottery Commission for one of our convenience stores, and they told us that we were their number one customer for sales of lottery tickets. And it was just a little store in a little town in Colorado. Turned out the clerk was stealing. She stole over $500,000 of lottery tickets over a certain number of years, and we had to go figure that out.
Wow. Did she win?
Yeah.
Oh, she did.
Yeah. We drove past her house, and she had a big $100,000 boat in her front yard.
Yeah, well, that can be confiscated, so. Yeah, but the tip thing, if you're not using it, that's another one of those things added to the list when you look at your insurance policy. These are the audit fraud control or anti-fraud controls. You can look at those if you choose to, either on the website, ACFE website. You can see all of those things in there. This is the effectiveness of some of these, and one thing I want to point out, look at the bottom one. External audit of financial statements. 80% of the subjects in this study had external audits. Look at the difference, the effectiveness of having the external audit on from a smaller fraud detection perspective, 3.4% improvement. It really, that's not what they're designed to do. Let's see, if anybody's got any questions, you can ask me about that later. Red flags. These are some things that if you see this, the bell ought to be going off and you're going, wait a minute, that doesn't make sense to me. If it doesn't make sense, pursue it. Don't bury your head in the sand. That's not your job. Take it to the next level. Discuss it with somebody that can do something. And as I said before, just because you got a red flag doesn't mean you've got fraud, any more than if you don't have a red flag that you don't have fraud. But these are just some things that you can, that are mostly commonplace that most companies are going to see. Some red flag statements. This bottom one, we have good systems and good controls. We are like a family. That's a quote from somebody that got stuck on an accounts payable scheme with a long-time employee who was like the mother hen of the office. That one came back. All right, opportunities. As I said, you can read through some of this stuff if you want this PowerPoint. And positive work environment, that impacts that rationalization issue on the fraud triangle. All right, think about that one. People are happy, they're less likely to be able to rationalize that they're going to do something to hurt the organization. All right, it's a matter of fairness at some point. Background credit checks, ethics and fraud awareness organization, we talked about that one earlier. Fraud risk areas, monitoring, oversight. True surprise audits, very effective. Insurance and bonding coverage, zero tolerance for dishonesty. And I mean zero, not I'm going to let you slide and everybody else, it's zero. It means everybody. Believe that fraud can happen in your organization. You're only kidding yourself if you don't. And finally, trust is not an internal control. I don't care what people think. It just doesn't cut it. And you're going to be disappointed if you rely on that to catch something. Okay, that's it. Any further questions?
Mike, are you willing to give us the slides and we can send it out to everybody?
Oh, sure.
You don't have to do it individually?
Sure.
Will that work?
Yes. And
You want to briefly mention that?
Do you want to do the honors?
you want to do this, or you want me to?
Okay.
Well, first of all,
There,
Go ahead.
there's something that is new that's going to be offered this fall here at Edgewood. And I'm going to be teaching one of the classes, so if you enjoyed today, think about that. If you didn't enjoy today, still think about it. It's a Fraud Risk Management and Detection Graduate Certificate. There's going to be a curriculum laid out. We've got 2 classes right now that are slated to be going live this fall. One is on understanding and managing fraud risk. That's the one I'm going to be doing. And then the other one is fraud examination principles, which I believe, Melody, you're doing that one?
I'm teaching that one. And the other 2 are still in flux. We're hoping to get it. It's not quite through the approval process. But as Mike's been talking about today, obviously spending the money up front and not being naive that your organization does not have this happening, that's the gist behind it. Mike has helped design this program. So it's all about prevention and understanding what's going on in your organization.
We have a questionnaire here. Are you going to pass those out?
There's questionnaires on that table. We would love your feedback because we're still in the stages of designing it and getting some final things. So we would love your feedback.
Now, this is feedback on the potential program that's coming up, not on what I just did. So, but hey, anybody who's got any further questions, I've got some cards up here if you want to take a card. Something comes up later, you want to talk to me about something, feel free to call. I mean, I'd be happy to talk with you if you got an issue or question or whatever. And thank you again for the last 2 hours. It was fun for me. I hope you got something out of it.
thank you very much, Mike. The topic of ethics, fraud, it's always a lively one, and your examples were very entertaining and some good conversation, so really appreciate it. Thank you very much. As our guest speaker, we have a drawing both for the IMA and the IIA, so if you would please do the honors and pick out our winners.
We don't want to be fraudulent about selecting the winner.
That's why we're doing segregation. And let's see, we've got Carrie Hazard.
No way.
Oh, yeah.
I finally remembered to put my business.
There you go. And this one's for the IIA.
I did an IIA meeting in Milwaukee last fall in conjunction with the District Attorney's Office, Milwaukee County. So I got a chance to meet a lot of people over there as well. So.
And our other winner is Kimberly Pershke. So, all right, congratulations. All right.
Couple quick housekeeping things. Restroom is through the cafeteria. They will need to set tables, so feel free to get up and move around, but your meal card, make sure that you know your meal card if you want to move around. And there will be a bar set up